I think we're going to see a nice bear market rally. There's a lot to love about these rallies, and they can be pretty significant. I think Apple's going to participate in that, Scott. And if you look at the frequency of these rallies, they've happened 16 times since 2000. And the magnitude has been surprisingly impressive. They're up 22%. So just to kind of frame in that, you mentioned the NASDAQ up 10% over the past week. That would suggest that this bear market rally is going to, we're about halfway through it. There's still another, call it 12% upside to this. And so I would say this, enjoy this, but be brave as tech investors because we are not through the bottom of this. And if I may just continue with the thought quickly, is that a bear market rally will end, all good bear market rallies end until there is visibility that fundamentals are improving. And if we fast forward a month from now and start thinking about how investors are going to be positioning themselves for the June quarter results, I suspect that we're going to see some cautious anxiety amongst investors because the March quarter, we looked at 20 tech companies. 11 of the 20 largest tech companies had negative commentary regarding June. We think that that is going to stir concern from investors. And so put it simply, Scott, just enjoy this ride, the next 10%, and then batten the hatches down because it's going to get bad.
I mean, I think, Mark, a lot of people would take that 10%. That sounds optimistic. I don't know whether you believe it or not. Do you?
Well, you're right. I think most people would take another 10%. I was on the show a week ago, and it's up 10% from then. And that Friday, a week ago, everybody was chiding anybody who talked tech positively. So that's how fast things can move. I do agree with Gene. I think we're going to start to look at the June quarter pretty soon. But we've seen some numbers in the last few days. You looked at Workday's numbers when they reported and others. And expectations and analyst guides are going down. And at the same time, some of these stocks are performing just fine. So that gives me a little bit of confidence. We've also seen some things that are obviously backdrops that are terrific. We saw some M&A this week in a large takeover, which is the kind of indications you want where people are using some of the balance sheet. Because these balance sheets for these tech companies are in durable shape. And what they do with it is going to be fun to watch over the next 2-3 quarters. And I'm looking at that. And again, this week showed some evidence of those signs.
Adam Parker was waving his hands like he wanted to get in.
Oh, look, there's 40 years of history where the analyst estimates can come down and the market can rally. So what I don't want people to be confused about is you can have earnings grow year over year and still have the earnings expectations come down. Right now, they're for 9% earnings growth in 2022 versus 2021. That's what the bottom-up analyst estimates are for. If we get revisions down to 6% growth, that could still be perfectly fine for equity markets. So you can have downward revisions in an upward equity market, and we've had that a lot in the last 45 years.
So, Gene, I mean, Apple really specifically, the talk about iPhone production numbers coming down, should we believe any of that?
Well, it's true. The production numbers have come down, and it's you can believe it, but you have to put it in a context. Is that it's standard operating procedure for Apple to initially tell its suppliers to have produce a large number of iPhones, and then it's operating procedure to tell them to cut production because they always do that. And so I think that's where you get some of the noise around these data points with the market backdrop. I think it can get people concerned. And I want to be clear here. Apple is, if we go into a recession, Apple, their business will be negatively impacted, just like everyone's business. I think we're going into a recession. And so to answer your question is that we should be, there is concern related to some of these data points. But ultimately, I think in Apple's case, I think it will outperform many of these other companies because essentially we can't live without it. They fall into that category of can't live without it. And also, they have other products coming. And we're going to probably hear more about that on June 6th at their developers conference. And so there is room for optimism when you think about the growth piece of Apple in the next few years.
But I mean, if we do have a recession, as you say, you think we will, and Apple, may go down. It probably will go down. It may not go down as much as the others for the reasons that you just suggested. I mean, what would your price target be if you had your old hat on?
Old hat's at $250. It seems optimistic in this view, and that's a 2-year price target. It used to be a 1.5-year price target. I've pushed it out given what's happened with the market. It's my view of where this goes, and ultimately what I think is that 2023 is going to set up to be a great year. We're going to have an ugly middle part of this year. There's going to be wringing of hands, and I think as soon as things are flushed out, I think people are going to look at better growth, and I think Apple's going to participate in that. And so I'm still optimistic that there's measurable upside to Apple over the next 2 years. $100 from here. 150 is where that's not. Is that now?
Mark, real quick before I let you go, your picks right now would be AirBNB, which has gotten crushed, right? And LegalZoom. Give me the Airbnb story, though. Why should I put money there right now?
Well, you're right. It has gotten crushed. It's down over 20% since April. And we just feel like leisure is going to continue to be a winner. And the balance sheets of some of the people who use Airbnb continue to be fine. And again, if we go into a recession, all bets are off. But I think we're going to see, and we've seen some evidence of that some of those balance sheets for some of the haves of the last couple of years are just fine. So they're growing substantially. It's going to be low 20s times EBITDA for next year, and they're growing as fast as they are and gaining much share. We like it. LegalZoom, similar. Comps ease in the second half. They have some new products. It's trading very reasonably at 3 times revenue. It's just a name that's going to continue to gain share, and I think you're going to wake up when people come back to a name like this, and they're going to be very happy they own it at 3 times revenue with a very good balance sheet and doesn't need to raise more capital. And those are the kind of names I think are durable in this economy.
All right, Mark Lehman, Gene Munster, I appreciate it very much. I'll see you guys
soon.
Up next.
Thank you.
Stocks are rising.